right, let's try this one more time. Hey, Connie Ruiz is here. Good to see you. Delia Kelly, Techno Pink, British Grey, welcome. Thanks for joining. Steph UH, Tone Rick, welcome. Scott Ange, Paul Greenwell, good to see you. Now, I think we're having some issues with the live chat. So if the chat goes out, we'll just, or if the chat goes out again, we'll just call it a day. Hey, Techno Pink is here from the Dominican Republic. Always a pleasure to see you, Techno Pink. Thank you for joining. RJ is here from Colorado. Says we are back indeed. I see Mac Lover says, hey Tom from Wisconsin, stay dry. Thank you, Mac Lover. British Grey. So I think we're having some issues with the, what is it called? The Prism live stream. So we'll see if the chat goes out again. We'll see how long it lasts. Hemi Powers here. Good to see you as always. Juan Vasquez to stay warm. Thank you, Juan. Yeah, I was thinking about this today, and it was so rainy all day today in Manhattan that, in my view, I would rather have it like 28 degrees and snowing than sort of the weather we have tonight. You know, rainy and, you know, probably like 40 degrees. Because at least when it's snowing and it's not like super, super wet, heavy snow, at least you can walk around outside. It's not too cumbersome. Puff is here. Good to see you. Thank you so much for joining. Too Old to Be Gaming is here. Says we are back. Trust you're well. It was a very, very wild and busy day in the markets. We had the NASDAQ, the Dow Jones Industrial Average, and the S&P all markedly lower on the day. But take a look at the view of the Empire State Building we have here on East 33rd Street and Madison. DM says, hey Tom, it's 55 degrees. Good to see you, DM. Thanks for joining. Albany County Sheriff Live, welcome. We're here Midtown Manhattan on East 33rd looking at the Empire State Building. Now, the Dow Jones Industrial Average was down about 1 percentage point. The S&P 500 was down about 1.5%. And I think the NASDAQ composite was down just right at 2%. Now, this is to be expected, right? Because if you looked under the hood of the market, a lot of the stocks that really, really got creamed today were very tech heavy. A lot of the semiconductor companies, which we are going to talk about today. And I think it's going to be very difficult. And I posted this on Twitter today. I'm not sure if you guys saw it. But I said, I think it's going to be very difficult for this market to make a material bottom if we don't have broad-based participation from a lot of the semiconductors. So one of the indices that I watch is called the BlackRock iShares Semiconductor ETF. Trades under the ticker symbol SOXX. And I posted a link to the top 10 individual stocks that make up the ETF. And I think the top 2 stocks in that ETF was Texas Instruments, Broadcom, NVIDIA, AMD, and I forget the other one. But you get the picture, right? And as we've been talking about on the stream, really quick, this is 34th Street. It's raining so hard that if you look all the way to the north, you can't even see the top of the One Vanderbilt building anymore. Now, all of the major innovative growth, new products and services that are going to be driving the majority of the growth of the rest of the 21st century, they are all going to have semiconductors, right? Chipsets. And if anybody's familiar with Dow theory, right? So in Dow theory, you look at the Dow transports. And the theory there is usually if you look at the Dow transports and they're rolling over, you can use that as a pretty good proxy for the health of the overall economy. Now, there are some analysts on the street that say it's maybe more appropriate to look at a broad-based semiconductor indice or an index ETF in order to make a particular substitution for Dow theory, right? And I think that may be appropriate because you talk about EVs, you talk about really any smart appliance, autonomous driving, AI, cloud computing, data center, all has to do with semiconductors and chips. And if we can use these indices as a leading indicator for demand, well, if demand for semiconductors are slowing down, there's a pretty good chance the broader economy is going to slow down too. So, you know, if you look at ticker symbol SOXX, we are trading well below the 200-day moving average and just right at the 50. We almost cracked below it today. So very, very important. If you go to BlackRock's website, I would highly advise, as we are standing across the street from the Empire State Building here, to look at the individual names that make up that indice. Hey, I see Sparks Carnival is here. Good to see you. Welcome. Sally is joining us on this very rainy night in Manhattan. Although the Empire State Building looks good, the color scheme looks very interesting amongst all the clouds here. I think it's going to rain straight through to tomorrow. Warwalker is here. Welcome. Ed T says, hey Tom, I'm working now. Zozo Bob says, hello Tom and team. Zozo Bob, speaking of Miami, we will be there very, very soon. Grand Street 1 says, with 71% of the vote in Georgia, dead even at 50-50, says Grand Street 1. Using People is here. Sparks Carnival says, Tom, did you see Walmart warned increasing shoplifting could force them to raise prices or even close stores? You know, I didn't see that, Sparks Carnival, but I definitely wouldn't doubt it. When did they put that out? Did they put that out today? Earlier today? Was it like a statement? Because we saw the same exact thing happen at Target, right? Does anybody remember when we did a deep dive into Target's earnings report, ticker symbol TGT? I believe it was actually the CTO or the CEO came on the earnings call and said specifically that shoplifting has been a very, very, I would say, broad-based pain point for them in the business. Same thing with the CEO of Rite Aid. They've actually called out specifically New York and said in some stores in Midtown Manhattan, they've had to close down due to all the shoplifting. Interesting. Andre Almar says this shoplifting quote-unquote trend that is happening all across the United States is ridiculous. Yeah, it's really strange, right? And I think it's a multifaceted reason for it. Now, oftentimes when we talk about it, it tends to get political in nature. Really quick, this is Chipotle, ticker symbol CMG. We're actually going to be talking about Chipotle tonight. I think you guys are going to find that conversation interesting. But I think it has to do with multiple things, right? And if we just talk about economic history, crime tends to increase when the economy is not doing well, right? Now, many would argue that, you know, what recession are you talking about? The economy is doing great. There's nothing to worry about. But what we've been sort of supposing on the live stream is that I would even argue ever since the lows of 2008, bringing us out of this massive financial crisis, we've had a very, very lopsided recovery, right? Where you had probably the top 10% of Americans have a really robust, broad-based recovery, and everybody else is, you know, arguably worse off. And I think that coupling all of that with high inflationary pressures, the labor force participation rate dropping yet again, and we didn't even talk about that, right? So on Friday, we obviously got the non-farm payrolls. They came in hotter than expected, but there were two main things within that report that I think we should be paying close attention to. Number one is the unemployment rate was unchanged at 3.7%, and the labor force participation rate actually declined. Hey, Evan Weeks is here. Good to see you. This is felt poverty. I can't afford as much as I used to. Trend to coincide with higher petty crime as well, says Evan Weeks. Yeah, I think Evan, you make a good point, right? I would think there's multiple factors. I think the economy, inflation is definitely adding to it. I also think it's, quite lax policies on crime as well. But I think it's a lot of stuff. Hey, Diego's here. Good to see you. Malcolm says most offenders see little issue with robbing retail premises as they are insured. Still wrong, of course. Yeah, but I mean, that is, I think in order to have a functioning society, you need outstanding ethics. And I think when you have an ethics breakdown, I think that is very concerning, to say the least, maybe. Hey, Dusty Cole is here. What's up, Dusty? Welcome. Yeah, Dr. Long, this is Tom. I think the labor force participation rate is a very overlooked statistic, unfortunately. I agree. I think it is. Hey, Michelle McGraw, our good moderators here, says, hey, Tom, where are we walking to this evening? I think we're going to go to the Hudson Yards. We haven't been there in a while. If you look all the way in front of you, you could see Macy's Herald Square on this very, very rainy night. Solo Flyers says, rainy New York City. Still beautiful. Hey, Tom, good to see you. Edward Adams says, these people steal this stuff and then resell them on eBay and Amazon. Sickening. All right, I got a quick story about that, Edward Adams, and then we'll sort of move on from the shoplifting because I know it gets the chat all riled up and goes gangbusters. I witnessed something ridiculous the other day. So there was a couple gentlemen stealing from a drugstore, right? And then, I'm not even joking about this, quite literally 2 blocks down the road, down the street, whatever you want to call it, they were setting up a makeshift table and selling like laundry detergent and the toothpaste that they stole. They were selling it on the street. It was ridiculous. Adrian says, hey, Tom and team, good to see you, Adrian. Thank you for joining us tonight. Adriana is here. Welcome. YouTuber. Good to see you. The LT Prod. I trust you're well. Mac Lover is here. So Mac Lover said something very interesting before the stream unfortunately went out. I think it was a really, really good comment, and I think we need to be watching this trend very closely. Tim Cook and Apple announced that they're going to be making an investment into Arizona specifically, I think, into semiconductor manufacturing and production. And this all comes about a week after Apple has formally announced that they are going to be moving a lot of their manufacturing capacity outside of mainland China. Now, there's a couple reasons for that, right? We've been talking about that almost to the point of ad nauseum. That is due to the zero COVID policy, the outbreak of the riots and protests that really originated and started at the Foxconn factories. But I think the protests are actually working. China has walked back some of the very harsh and draconian lockdowns. But if you're thinking about running a business, if you're thinking about forecasting, you really, really can't run a business if you can have the government at any time sort of come in and shut down your operations. So it's not just Apple, right? We've been talking about this specifically as it relates to semiconductors in the United States. We're seeing more pure play semiconductor companies invest billions of dollars into building manufacturing capacity and facilities in the United States to domesticate that supply chain. And I think this is just a very, very, very early trend, not just in the United States, but some European countries as well, because COVID really taught us that you cannot rely too heavily on either a foreign country or a foreign entity for your manufacturing and supply chain. So I think we're going to need some extreme diversification there. Evan Weeks says, Tom, speaking as an IT professional, I think the investment into onshore microchip manufacturing is a great thing. The caveat is that microchip manufacturing is neither easy nor cheap. Yeah, I mean, Evan, I'm going to have to agree with you, right? I mean, I think any time where we have jobs coming back to the mainland is a good thing. Now, To your point, here's what I would also say. If we're being realistic about this, we're walking right in Herald Square, by the way. If we're being realistic about this, these facilities take many, many years to actually build, right? So it's not like, if Intel and Qualcomm and all the others announce that they're building facilities, it's not just like we are going to automatically day one ramp up that manufacturing capacity. It's probably going to take a couple of years, right? I wouldn't be surprised if it takes until early 2027, maybe late 2026, for all of these manufacturing facilities to come online 100%, right? It's going to take a long time, and you never know. Due to the economic climate and the economic downturn that we're seeing right now, maybe some of these projects will be put on hold. I think we need to be paying attention to that. I'll give you guys one more shot of the Empire State Building. It's so rainy and cloudy, you could barely see the top of the Empire, but I think the only reason why we could see it tonight is because it is glowing bright red. Mike C says, what percentage of production are we talking about for Apple? Single digits, question mark. Mike, I'm not too sure. You may be right. I think it's probably a little bit more than that. Now, a lot of the manufacturing capacity is probably going to move to India. It's probably, a lot of it is not going to move to the United States, but one of the reasons why I think a lot of the semiconductor manufacturing is moving here to America is because, and rightfully so, the Biden administration actually has announced that this is a potential threat to national security, right? Which it is. You don't want to have foreign entities excelling and advancing lead. So the government is going to throw a lot of money at this. There's going to be so much subsidy. There's going to be a ton of tax breaks, government spending going into essentially bribing, right, for lack of a better term, a lot of these companies to start building factories here. Look, I think it's the right thing to do. I think many people would agree. Austin City Limits, thank you for joining us tonight. Our good moderator, the Siren, is here. Welcome. Now, I would want to warn you guys, if I'm not reading many of the comments tonight, I do apologize. Anytime it's raining, we have the umbrella, so it's very difficult for me to hold the umbrella, hold the phone, and then scroll through the comments as well. Vivian is here, says hello good friends and good evening Tom. What's up Vivian? Thank you so much for being here. DP says Tom, I made $30 on some SPY put today. All right, DP, very nice. Very nice. SME Media, welcome. Thanks for joining. DP says, I love these streams. Thank you, DP. Hey, Julia M says, thank you for being out in the rain for us. Thank you so much for your $2 donation. I'll try to turn around here and give you guys a better view of the Empire. Now I will say this, last night we were briefly touching on crude oil, and if you look at ticker symbol CL right now, I think we're trading at what, $74? Now in the grand scheme of things, back on March 10th is when we really hit the top tick in crude, coming in at around $130. Now, ever since that time, we've been watching very, very closely individual oil stocks go higher, while the underlying commodity, which really drives the sector, diverge from the fundamentals, right? So we've been seeing crude oil go from 130 down to 74, all while individual oil and gas stocks such as Chevron, ExxonMobil, and many others continue to hit 52-week highs and all-time record highs. Also the XLE, which is the Spiders ETF that tracks the energy sector. Here we are on 7th Avenue, right outside Pennsylvania Station. And I think we're finally starting to see that divergence close a little bit. If you look at the trading activity today on the XLE, we were down about 3% on the day and closed below the 50-day moving average. Crude oil is also trading below its 50-day and 200-day moving average as well. So I think that's something we need to be watching. Now, what does this mean for inflation? I actually think it's pretty good news, right? If you talk about, I would say one of the largest expenses that an American has is fuel, right? You got to put gas in your car. You got to do a lot of other things. You got to do a lot of other things. So I think as we get more CPI reports out, we're going to get another one out next month. I think that's actually going to reflect favorably in those numbers because gasoline is probably going to go down quite substantially too. So I think we need to be paying attention for that and understand, or trying to understand, when a trade can get a little long in the tooth here. Hey, William Brooklyn is here. What's up, William? Thank you for being here. Vinny says energy are the biggest gains for institutional investors this year. They will sell when the new year comes, says Vinny. Yeah, I mean, it's an interesting, I've been noticing usually these stocks will top after, well before you see a decline in earnings. And if you think about the earnings performance in Q3, we have to be cognizant of the fact that Q3 earnings for a lot of these oil companies ended in September, okay? Now, why do we need to be paying attention to that? Well, it's getting really windy. Because during September, or through September, oil, or crude oil, was trading well above $100 a barrel. Now we're not. We're in the 70s. Now, I could be wrong, right? But I think it's important to watch this trend. I'm not saying I'm right. But I think we may be getting a tad bit long in the tooth for some of these energy plays here. Maybe we are in a correction in a longer super cycle. Who knows? But we've been watching this divergence here. And if you want to look on my Twitter, I posted a really, really nice visual for all of you. If you follow @WalksWallStreet on Twitter, I think it was the second or third to last thing I posted today. You could see some nice visual there. Hey, Robert, says Tom, do you have your umbrella? I do. So I got actually a really, really nice umbrella. One of those like $30 super, super strong umbrellas not too long ago. Probably about 2 weeks ago. And it's already broken, as you can see. The wind is so crazy, it just rips it apart. Yeah, Aaron, that is true. Aaron says this is mist compared to the Miami rain. That's really, really true. Krog Dog says, hey Tom, loving the scaffolding. Yeah, definitely loving it now. For those of you in the chat who are just getting here, we are headed to the Hudson Yards tonight. So hopefully as we make our way west, the wind won't pick up. Mac Lover says might be a little break in the rain for a few minutes, looking at the radar now. Yeah, I think it's supposed to rain all day tomorrow too, isn't it? Karen is here. Karen Oakley, thank you so much for being here. The ABX girl says, hey, all late to the party. Ooh, look at this Tesla here. Now, speaking of Tesla, I think there's a handful of stocks that I think are what you call in very, very aggressive stage 4 declines here, which we'll talk about. But first, I want to point out this building to everybody. This is the very famous New Yorker Hotel. And I believe the New Yorker Hotel now shares, I think, a third-party company that rents these to college students, so it's like a dormitory, is in the top 13 floors, I believe, of the New Yorker. But very famous hotel here on 34th Street. And once again, you could barely see the Empire State Building because there's so much fog, but we got it nonetheless. Norm Roberts is here. Says hello from Bangor, Pennsylvania. Good to see you, Norm. Thank you so much. Trust you're well. Thank you for joining us on this very misty and rainy night. Yeah, Gary Carpenter says it's been raining all day long here. Now, I want you guys to take a look at Amzn, right? And the reason why I'm bringing this up tonight is because on last night's live stream, we talked about a very, very important statistic that I think we need to be aware of as we venture deeper into this bear market. And that is usually true market leaders of the past, right? So in every major bull cycle, you have a handful of stocks in each specific sector that are leading the market, tend to outperform. But once those particular stocks put in a top, very, very seldom do they go on to be the new true market leaders of the next bull cycle. And I think that's exactly what's happening with stocks like Tesla. Here is Madison Square Garden, by the way. Amazon and Alphabet. Now, I posted some visuals on Twitter. Once again, if you want to look at those, you could follow @WalksWallStreet on Twitter. Now, Amazon has put in, I think, a very, very substantial top where it may not see all-time record highs for many, many years or maybe never again. It has carved out a massive, what you call a Wyckoff distribution pattern, if anybody's familiar with Richard Wyckoff. And now we are in a very, very aggressive stage 4 decline where price rallies back to the 50-day and then gets turned away, rallies back to the 50-day and then gets turned away. So I would be very, very careful about bottom fishing these particular names here, because the market has to reprice these names for the new interest rate environment that we're in. This is the brand new Moynihan train station. The front of it is still a working post office. I'll actually have to go here tomorrow. I got to get my passport in order. So I went there. So to get your passport, you need what? You need an original copy of your birth certificate. You need a copy of it, the original social security card, and then a copy of it. So I got to get all that stuff together. Hey, Crude Dog, what's up? This is Tom. Moynihan is gorgeous. I agree. Paul Tricky is here. Says, hey, Tom. Good to see you. Mike says, clean the lens. Yeah, I'm going to try the best I can tonight. It's going to be a difficult one. DWG says, Tom, how come the NASDAQ futures are always 500 points higher than the day points? What do you mean by that? So you got to understand if you're looking at the NQ, right? That is the NASDAQ 100. So maybe you're confusing the NASDAQ 100 with the NASDAQ composite. All right, I'll give you a quick shot of where we are headed. We are headed to the Hudson Yards. Sparks Carnival says, Tom, Ken Griffin's hedge fund Citadel is up 32% this year. You know, I saw that too, Sparks Carnival, and you know who? It's so strange because we were talking about Bridgewater Associates, which is one of the largest hedge funds on planet Earth. The founder is Ray Dalio. I would highly, highly recommend and suggest reading his new book. I think it's called Ideas for a Changing New World Order. Something along those lines, but I would pick it up. But his fund, their flagship fund, was up about 30%. And they've since given it all back, and I think they're actually down single digits on the year so far. Yeah, Smee Media says, have we been to Hudson Yards since Thanksgiving? I don't think we have. I think we've been here on Thanksgiving night, and then I don't think we've been there since. Jay Cases says, why is FTX coin trading above zero? I have no idea. I'm not paying attention to any of the FTX stuff anymore. We already know what happened. I mean, I think now it's just news flow, nonsense. Speaking of cryptocurrencies, hold on, I gotta put you guys down for a second. But speaking of cryptocurrencies, did anybody see Jamie Dimon today on CNBC talking to Andrew Ross Sorkin? I thought the interview was absolutely hilarious. Now, I don't agree with everything that Jamie Dimon says, but I do agree with about 99% of what he says. Did you see the interview? I forget the terminology he used. I was crying laughing in the office. What did he say? How could I forget? But he said something along the lines of, oh, that's what he said, crypto is a sideshow, which I think the vast majority of it is. I think you guys know my take. The altcoin market, or the alternative coins, these are all unlicensed and unregistered securities, right? And the SEC is going to throw the hammer down on this, all right? And I've been predicting this for years, if you've been watching this stream. So, you know, that's the problem with a lot of these exchanges that have their own token, right? Because they're essentially soliciting an unregistered and unlicensed security to customers, which is a big no. And I think a lot of people are now allegedly are going to go to prison for that, right? Now, you know my take on Bitcoin, because the SEC specifically made a ruling and said that Bitcoin is deemed as property. It's not a security, right? Now, I think the value proposition for me, the rain is really picking up here. You know, one thing you'll notice about New York, every time it rains, you have these massive pools of water that pile up here. The value proposition that I see in Bitcoin is that it's unconfiscatable money, right? So I choose to have an allocation. But a lot of people are using Bitcoin to speculate with high leverage on unregistered and unlicensed exchanges, because they could trade with, 50 to 1 leverage, which is ridiculous. That's not even legal on a normal broker dealer, right? So when everybody, and look, for everybody who lost money in this, it's horrible, it's heartbreaking, and Sam Bankman-Fried is defrauded a ton of people. It's horrible. But at the end of the day, you really sort of got to do your own diligence on this stuff too, right? I'm a really firm believer of self-accountability and a self-starter mentality. And unfortunately, really ever since the pandemic, when the government gave everybody Trump bucks and Biden bucks to stay home and gamble, to trade stocks and cryptocurrencies, everybody thought they were, an expert and just used this as gambling, right? And now it's coming to roost and people are getting burned, and now everybody wants to cry foul, right? So, look, I think it's a good learning experience, but at the end of the day, I do personally think that Sam and his team are probably going to face significant jail time for this. But I also think it should present itself a learning opportunity for other people to say, look, if you were putting money on an offshore exchange in the Bahamas, okay, or an offshore exchange in the Cayman Islands, you have to accept some risk there, okay? You have to also accept some risk. All right, I think that is fair, because they set up shop. These unlicensed and unregistered exchanges set up shop in the Cayman Islands and the Bahamas for a reason, guys, okay? And all of those people who were on a lot of these lending platforms, such as BlockFi and all that, they want to jump up and down and say, oh my God, I lost all my money. But you also have to accept responsibility. Like, guys, if somebody is offering you a risk-free rate of return or a yield of 8%, guys, if it's too good to be true, it probably is. And that's why on this stream, what do we always talk about? You gotta understand the basics, guys. You have to understand how the bond market works. Because if you understood how the bond market works fundamentally, okay, you would have realized that, okay, if BlockFi is offering me an 8% yield, risk-free per annum, that would mean that BlockFi also has to be getting over an 8% yield to be turning a profit. And think about how they generate that yield. They obviously have to take on an extreme amount of risk, okay? And this is actually where I kind of agree with Warren Buffett as it relates to the cryptocurrency environment in general, is because it is a very, very leveraged and levered system, okay? So just like, what did we talk about 2 nights ago as it relates to the sovereign bond market, the government bond market, and the corporate bond market? Well, if you buy a US Treasury, technically that is considered a risk-free rate of return because the US government has never defaulted on its debt, right? But think about corporate bonds, okay? Corporate bonds are priced via a spread over the benchmark 10-year US Treasury yield for a reason. Because corporates have a higher probability of default risk, right? If you buy a corporate bond, there's a good chance that that company may go out of business, right? And that's why it commands very, very high yields. Now, as you go down the list from investment grade bonds to non-investment grade, the junk bonds, well, junk bonds have a very, very high yield, but they have a very high yield for a reason, right? Investors are demanding a high yield because there's an increased probability that you will probably not get paid back. I think my umbrella just broke in half. There's a high probability that you may not get paid back, right? So if you're gonna put your money to these crypto lending platforms, let me try to fix the umbrella I'm doing here. If you're gonna put your money into these cryptocurrency lending platforms, you also have to accept the fact that it's very, very risky and you may not get your money if this thing implodes. So I think there needs to be responsibility on both sides. Yeah, that's sort of what I'll say about that. But again, no excuse for anybody defrauding anybody. I think Sam Bankman-Fried is horrible. I don't know how you could do that to people. Really, really terrible. I know, Mike C. This is a bad night to blow a tire on the umbrella, I know. I know, Gary Carpenter says, Tom, you had a piece of junk. It's actually a pretty industrious umbrella. It's just been taking a beating here. Crude Dog, this is a $30 umbrella, my friend. It's just been through the ringer. I mean, we do these live streams, you know, 5 days a week in all the elements, so it definitely takes a big beating. Hey, Kevin Ramsey, good to see you. But yeah, I mean, so now for the FTX thing, I've muted all the keywords. I think we know what's need to be known about it, right? I think anything else, you know, Sam Bankman-Fried going around on this big media parade is really just to drive ratings and things like that. And there's something, I'm not sure if anybody's heard of the term a useful idiot. Now, to a point, the media can, you know, prop him up because they know that the interviews are going to get a lot of clicks. But at the end of the day, it's going to be litigated significantly. We pretty much know what happened, and I think it's time for the vast majority of people to move on. Hey, Brad's Brain, what's up? This is just grab another umbrella from the lobby. They're free. Are they really? I don't know about that. I wish they were. Hey, Jasmine, good to see you. All right, so we are here at the Hudson Yards, overlooking the vessel. B. Kim says, hey Tom, is the vessel still closed? I think the majority of it is closed, but I do think you can go in the first floor there, I think. All right, let's go inside. I think we're gonna be forced to put my umbrella over here. Could we get a rip or a wrecked in the chat for the umbrella? RIP. Rip. Well, I'm very thankful for the umbrella thus far, but I think it's time to go inside. All right, let's go in here. I think you guys are going to be pleasantly surprised, though, when we go in the mall here. All right, what do you guys think of the lobby here at the Hudson Yards? Shops at the Hudson Yards? Hey, Nicole be winning. What's up? Good to see you, Nicole. Thanks for joining. We are here at the shops at the Hudson Yards. Looks really, really nice tonight. Not a lot of people for a Tuesday. Hey, Carol Williams. It's Tom watching from Antigua and Barbuda. Welcome, Carol. Thank you for joining. If you guys are enjoying the live stream so far tonight, feel free to hit the like button on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we would love to have you along for the ride. I think they did a really, really good job here. Hey, John Feldman. This is Tom. England versus France. Brazil versus Argentina. Who you got? I really want Argentina to win the World Cup, mainly because Messi has not won a World Cup. I found it interesting that Cristiano Ronaldo didn't start today. I found it very interesting. All right, I'll take you guys to the second floor. The dark horses, take one look and you could plainly see the economic reports for first quarter are going to be dismal. Yeah, so the dark horse, when are we getting, oh, look at this. So I think we're getting the next GDP reading January, right? I think mid-January we're getting it. Will M says Morocco could surprise Portugal. Yeah, I mean, that was talk about another crazy game. Morocco with the big upset on Spain. It just goes to show really anything can happen in the World Cup. That was an awesome game, by the way. Yeah, but I mean, look, the dark horse makes a pretty good point, right? I mean, we've been talking about many of these leading economic indicators on the stream, right? We've been talking about the Institute for Supply Management PMIs rolling over and decelerating for the last 9 months. The service sector PMIs we just got yesterday, they're rolling over quite nicely. So all of the leading economic indicators are pointing to one thing. So this is the view from the second floor. We were just down here. Hey, Brad's Brain says, hey Tom, what was the chart you posted on Twitter today? Falling off a cliff or whatever it was. I posted a lot of stuff on Twitter today. Was it the Amzn one or was it the nameless chart? If it was the nameless chart, it was Zoom video, ticker symbol ZM, just to really showcase sort of the fact, what we were talking about on last night's live stream, that previous true market leaders, once they top, they tend to top for good. Oh, if it was the nameless one, Brad, it was Zoom video, ticker symbol ZM, did a complete round trip. I don't know, but so what are we, the final 8 now? Who do you guys want to win? Who do you guys want to win the World Cup, the entire thing? I think I'm going to go with Argentina. Look, I really didn't like how Cristiano Ronaldo sort of walked off the field today. I understand he was upset probably that he wasn't starting. But at the end of the day, I mean, you got to, it's a team sport. It's not all about you, right? I know he's the greatest player on earth, debatably. But you can't, sort of just walk off the field and be upset because you didn't start. You don't always have to be the superstar, you know what I mean? So I think Messi may be a little bit more of a team player. Thoughts on that? The Garlic says, Tom, I think France is going to win it all. Ryan Beck, I think you're right. Says, isn't that the same reason he got the proverbial boot from his old club team? I think you're correct. But I also think that he's signing a ridiculous $200 million deal with a club in Saudi Arabia, isn't he? Or was it 100 million or 200 million? I forget. Regardless, it's a ridiculous amount. Anyway, was it 100 million? Now I'm curious. I think it was either 100 or 200. Anyway. Oh, it was 200 million? Dusty Cole? And it's a 2-year contract. It's probably a guarantee as well. That's wild. That's insane. Ah, 3T3 says, I want to see Argentina for Messi, but I think the winner of England versus France will win. Yeah, that's right. England is via a spread over the 10-year, right? So if a very good score or rating from the major rating agencies like Fitch, Moody's, and S&P, if you have AAA rated bonds, well, the spread over the benchmark, that 10-year US Treasury, is probably going to be rather slim, right? However, if you have an egregious junk and non-investment grade score, you're probably going to have a very large or wide spread over the 10-year. So the reason why I like to track those particular ETFs is because what you'll notice if you go on tradingview.com or whatever sort of charting software you use, usually it's the junk bonds that move first. And I think the reason for this is investors are always trying to predict, and the market is always trying to predict corporate earnings growth and oversee if, God forbid, there's going to be corporate earnings contraction. So generally speaking, investors will dump or sell junk bonds if they are forecasting an earnings recession or a higher chance of default for these companies. And that's why, even if you overlay, let's say, a major equity index like the S&P, the Dow Jones Industrial Average, or the NASDAQ over, let's say a junk bond index, you'll notice that when the spreads blow out, is the terminology we use, when you have a huge blowout in the junk bond yields, that usually coincides with some sort of stress in the market. I would say most telling and most notable, and I would say most recent, is during the 2020 COVID crisis, and also in 2018 when you had corporate junk bond yields blow out right around Christmas Eve, actually. And that was the bottom of the market. Hey, photos from around New York. What's up, man? This is so much rain. Dude, it is crazy, crazy rain here. And our umbrella blew out. Speaking of things that blew out, our umbrella took a big blowout. Hey, Jimmy Anderson is here. Cheers, dude. Hope your holiday season is off to a good start. You as well, Jimmy. Thank you for being here. I just got to put you guys down for a minute. I got to zip up my jacket. All right, we are good to go. Let's head out, everybody. Hopefully you enjoyed the mall here at the Hudson Yards. Hey, Hawaii is here. Welcome. John says, is this Columbus Circle? No, this is the Hudson Yards. On this very windy and rainy night. Tim Hortons is not bad. Tim Hortons is the Canadian brand, correct? I think it's not bad. It's pretty good. Yeah, Joe, we do have a backup copy of the New York Daily News here for sure. Interesting comment here from Susanna H. Tom, what is your opinion on Chat GPT bot? I don't even know what that is, to be quite honest. Not too sure. Now, did anybody watch the action in the VIX today? I think that's also very important to pay attention to, because if you look at a few things, Wow, look at, so right as we turn this corner, we're about to hit into a crazy wind tunnel. I think you guys could maybe just see it on the camera, right? Take a look at the streetlights and you'll see the wind. Wow. Yeah, usually around the Hudson Yards, you have these crazy wind tunnels here. Now, I think what has fueled, and we're just going to call it a bear market rally for now, is a few things, right? We've been getting a bid in the debt market. So we've had that 10-year US Treasury yield come down a bit. That's number one. Number two, we've had the Dixie, or the relative strength in the US dollar, also come down. And number three, we've also had the VIX collapse, okay? But we're starting to see the reverse here as markets sell off. Now, the S&P 500 has been turned away so far, right at its 200-day moving average. But if you've noticed, this sell-off is aligning almost too perfectly with at least a simple rally attempt in the dollar, a sell-off in the debt market, so we're having that 10-year US Treasury yield go up a little bit. And also the VIX is getting a little bit of a bid here. So if we can have this dollar wrecking ball once again show its head, I think the Dixie is trading at what, 106, maybe 105? I think the markets are going to continue to be under pressure here. Hey, Luis Garcia, what's up? Just like the movie Day After Tomorrow weather. Yeah, it's a nasty night here in New York City. Teresa Diaz, welcome. All right, we got to brave it. We just got to do it. There's no other choice. Savage Dude says, what is your profession? I'm an enterprise software sales. So we're headed all the way back to One Penn Plaza. And you can see it because it has that very luminescent blue top. Hey, Bruce Wayne, thank you so much for joining. We appreciate it. Aaron says it's better than a blizzard. I disagree. I would actually much rather have, temperatures where it's like 35 degrees or 32 degrees and snowing. I would say in the 20s and snowing because you don't really get wet, right? Ah, Hawaii. This is Tom. It's my last night here. I'm very bummed it rained. Well, I'm sure headed back to Hawaii is going to be a lot nicer than here. If it was like 28 degrees and snowing, at least you're not going to get soaking wet, right? Ah, Susanna H. I'll have to check it out. Yeah, Mike sees nobody's out, so there's really no buffering. Sometimes the internet could be worse in the rain for whatever reason. All right, we are approaching the backside of Moynihan train station. Ooh, look at this. You can see the wind right as we're about to cross here. You see it? Look at these guys. Yeah, so Sparks Corner makes a good point. AWS is having to give discounts. Lots of companies cutting their AWS spending. And I think what's really going to be an issue is think about all of these money-losing startups that are powering their operations via Amazon AWS, right? But notice what's different here. I mean, money is not cheap anymore. So the problem there is these companies are probably going to go under, and they're going to have to cancel their AWS and stop spending with them. And I think that may be significant. That may be a big significant hit. All right, I'm trying to, whoa, look at it coming across here. Holy crap. I'm trying to time it, so when the, what's it called?
There's no way that this umbrella. No.
All right, now we can go. Oh my God, look at that, dude.
Not happening.
All right, I think we'll just make it across the street. Oof. All right, we made it. Yeah, B&H photo is to the left. And if you look all the way to in front of you, you can't even see the Empire anymore, which is kind of crazy. That's how, what do you call it? That's how cloudy it is. Ooh, Brad's brain, I did not get a chance to watch the movie, unfortunately. Let me see if I can take you guys inside the Moynihan train station. I'll show you guys the lobby. Oh, it looks like they're doing more construction here. Or maybe they're opening this side. All right, so now this is the very famous Moynihan. Hey, who dat Dave is here. Is this the subway terminal? You can get the subway here, but this is mainly for the Long Island Railroad, New Jersey Transit, and Amtrak. TC. So did you mention the Dow Transports as a leading economic indicator? Yeah, we talked about that at the beginning of the stream. Now, one of the things that I look at more so and put more weighting on is the, oh, look at this. They made a Christmas tree out of the post office boxes. But one of the things I put a little bit more weighting on now, hold on, we have to sort of be quiet here. I'll give you guys a look here. Is the semiconductor ETF for the stocks, the iShares ETF from BlackRock. All right, team. I think we got to call it a night because I don't have the umbrella and we are getting soaking wet here. But thank you all for joining. I'm going to have to cut the stream short. And we will see you soon. Take care. So Dusty Cole, thank you so much. Joe Driver, appreciate it. And we will see you all tomorrow.